From the floor of the CME Group, this is Danny Riley on today's Cash Close. And the name of this video, the S&P Greek dip and the post-election rip. The high of the day in the S&P came in 2052.5. Mid-morning or midday, the low came in at 2034.80 early, and last, we're 2049 even. We're up 5.1 handles. Total volume, 1.25 million minis trade and 2.3 thousand big S&Ps trade in the pit. MOC, I'm a little confused here. I guess it has a lot to do because our guys in New York Stock Exchange warned us that the data would not be coming in as normal. The MIM was showing, I think, like small to 350 to 400 million to sell, and the actual MOC came out by 400 million to buy 10 million. I don't know. That's the way the data came across. It's crazy stuff. Tomorrow we've got a very busy economic schedule. It starts out with the first day of the FOMC two-day meeting. We've got the durable goods orders. We've got the Redbook number. We have the S&P Shiller Case HPI. We have the PMI services flash. We have the new home sales number. We have consumer confidence. We have the Richmond Fed manufacturing index. And we have earnings before the bell from M, American Airlines, Bristol-Myers Squibb, Caterpillar, Coach, Pfizer, and United Technologies Corporation before the open. After the closing bell, we have Apple, AMGN, AT&T, and YAHOO. Man, there's a lot of S&P names reporting this week. Now look, Friday, it was the early rip and then the late dip. And then last night, it was the big sell-off in Globex, or the big dip, and then today, it was the big rip. Go figure. What I have a feeling this has to do with is that the euro currency got down into the 111 handle. And I think as more money, as these conversion rates start to, really fall apart is what they're doing. I think what's happening here is, people are selling the euro, and they're bringing that money back into the U.S., and that's exactly why the stock market rallied so much today. Now, the other thing is I want to talk about is, while the S&P may look good right now, I still think that there should be a little hesitation here. Late in the day, crude oil traded all the way down to 45.08. So there's still a lot of weakness there, but on the other side of the coin, I'm kind of getting this feeling that maybe, you guys tell me if I'm right. Is crude oil in the S&P detaching a little bit? Has crude oil priced in lower prices, or has the S&P already priced in lower prices of crude oil? I don't know. I just can't figure that one out. But you know what? Irregardless of that, there's still a lot of news headlines out there that are affecting the S&P. We still are continuing to go from sell stops to buy stops. And again, program trading makes up 80% of all the S&P index trade. And with that in mind, I think it's just we're just waiting on the next big headline. We'll leave it like that. We'll see you guys tomorrow on the opening print.